Welcome, Mr. Denome, and welcome to this crypto update. Today's update is going to be a little bit more bearish than I would like it to be because, as you can see, our idea was that Bitcoin will head to 130K. But currently, we are trading below this trend line here. There is potential still that we have a bounce from this support line here or this trend line here. So if Bitcoin goes to like 111K, 110K, and then bounces violently back up, then we're still good. But there is potential that now the trend line has been broken, that we have a bigger pullback to the downside. Now, there is a major red flag, major top signal that is flashing. I want to talk about that in this video. We will talk about $3.6 billion worth of Ethereum, which is currently in the unstaking queue, and it might become sell pressure. We will talk about that. We will talk about good news as well, because there's plenty, and all of these things. And at the end of the video, we will come back to the chart here. But now let me give you the major top signal first, and it is Google Trends search volume for the term crypto. So when we take a look at the Google search volume for crypto, you can see it is currently at a value 31. The last time it peaked was here in January 2025, and it is right about here. This is when the search volume for the word crypto was at a high. But it wasn't as high as it is right now. It is value 31. Here it was a value of 26. So when we go back to this peak here, November 2029, it was a value of 29 as well. And when we take a look at November 2021, it is here. So this was another time that retail investors were looking for the word crypto in Google searches. And then in the last 5 years, the highest value this has ever been was the value 37. And that was May 2021. And when we take a look at that, you can already guess it where it is on the charts. It is this peak here. So right now we have a top indicator which is flashing, which has given us perfect times to exit Bitcoin in the past, flashing red. And it is telling me that, hey, Denome, get out of the markets. Don't wait. Get out of the markets. Now, the good side of this, or the flip side, is that maybe this time is different. I've heard this term, or maybe you have heard it many times before as well. But it could be different because we have so much of pro-crypto regulation and potential more money coming into crypto that this might continue to trend high for a while, like basically we saw in 2021, and this is not the peak, and we go to a value of 100 in the future as well. So that remains to be seen, but as of now, it is basically giving me a warning signal. So I'm gonna leave it at that. And now let's talk about the second red flag that I'm currently seeing on the markets, and that has to do with Ethereum. But before I show you the bad side, let's talk about the good things. And the good things is that last week, Ethereum ETF trading volume was the highest ETF trading volume out of all of the ETFs in United States, including bond ETFs, stock ETFs, and commodities ETFs. It basically had a multiples of trade volume compared to any other ETF on the market. So that is obviously great, but it also means that maybe it's time for Ethereum to have a pullback after this very heated run up to the upside. Then let's talk about the exits from staking. So this is the chart. It shows validator queue, and the values are the amount of Ethereum. And you can see entry into staking, and then you can see a chart for exit queue for leaving staking. And since July 22nd, you can see that the exit queue for Ethereum has been higher than the entry queue for staking Ethereum. And as of now, there's 860,000 Ethereum in the exit queue, and 285,000 Ethereum in the entry queue. In dollar terms, this is basically $3.5 billion, and this is roughly $1 billion, and the difference is $2.5 billion in total. And also, we're currently seeing basically an all-time high for wait time until you can unstake your Ethereum. So down in early July, it only took you a couple of minutes to unstake your Ethereum, but now it takes you 15.5 days to unstake. So what is causing this massive outflow of Ethereum from staking? There's a couple of answers. The first answer is obviously profit taking. So Ethereum has had a crazy run up from its lows of $1,500 until now $4,700. Practically a 3x already. So people want to take profits out of the market to safeguard their portfolio. And the bigger reason, in my opinion, in this scenario is something to do with DeFi investors. So in mid-July, Ethereum borrow rates rose from less than 3% to over 18% in a matter of days. So what happened is our golden boy, the founder of Tron Network, Justin Sun, he withdrew $600 million worth of Ethereum from a platform called Aave, which is a lending platform, or a money market, which is the fancier term for a lending platform. Now, why did Justin Sun take the money out? I don't know. But what it led to was this massive raise in interest rates for borrowing Ethereum. Now, why it is causing a panic with stakers is because liquid staking tokens exist. You know, I've been talking about them in the recent videos, and now this is the topic once again. Anyway, what you can do with liquid stake tokens is you can multiple your yield. So here is a graph I made for you guys, which is a very simple to understand. And this graph shows you how you can turn 3.5% annual interest on your liquid staked Ethereum token into a 5% yield. And this is very easy to do. The only thing you do is you have your liquid staked token, and then you send it to Aave. Use the liquid staked Ethereum as collateral. Then you earn 3.5%. Boom, nice. But then you borrow Ethereum and you pay 2% interest for this Ethereum. Then you take that Ethereum and convert it again into staked Ethereum. And then you earn 3.5% instead of, you earn 3.5%, but then basically the net effect of these two is a yield of 1.5%. So the net APY in total is 1.5 plus 3.5, which means that you're earning a yield of 5%. It doesn't work exactly as this, the value gets diluted a little bit, but this is just to show you how it works. So you're earning 5%. Now what happens when the borrow rate for Ethereum jumps from 2% to 18%? Instead of you earning 5%, you have to now pay 15% to the platform. Now, who would want to do that? Obviously, nobody. And this led to people unwinding their leveraged yield positions. And when they do that, they want to convert the liquid staked Ethereum back into Ethereum so that they can pay back the loan that they borrowed the asset with. And this has caused people to speculate that staked Ethereum will lose its one-to-one value ratio, which is tradable on liquidity pools across DeFi, which is basically causing a panic with the stakers. So instead of them selling their staked Ethereum into ETF, what they do instead is they don't want to sell it on the liquidity pools because the value of this conversion rate is being bad, is quite bad, because everybody is selling at the same time. So instead of that, they choose to unstake the liquid stake Ethereum so that they can unwind this whole position here. And that is basically leading everybody to unstake at the same time. I hope you understood a little bit of this explanation here, but this is basically how it worked. And in my opinion, this doesn't mean that they want to take out the profits as much. It's just that they want to unwind the position, and they probably still want to hold Ethereum because they were mega bullish on Ethereum. But I still believe that maybe, let's call it, half of the people will want to sell. So this could be in net total $1 billion or $1.5 billion of sell pressure, which might come out during the next 2 weeks from now. And then unless more people want to unstake, then this will resolve. But if more people want to continue to unstake, then this will obviously not unresolve, and we will talk about this problem in the future updates as well. So I will keep you guys posted what's going on here. But basically, this is bearish, but it's not as bearish. It's just an unwinding of these leverage positions, but it might still become sell pressure. But all in all, that's the update there. Now, talking about other news, we have a situation coming from the Bank of International Settlements. And this actually is another bearish news. This actually came out in 3rd or 13th of August already, and it has to do with anti-money laundering practices for crypto assets. And it's basically is making DeFi less good. So what they want to do is to introduce something called a deny list. And who determines what is a deny list? A deny list is made by them. And by them, I mean the international banks. So if you end up in this deny list, where they will use most likely AI to look at your public transaction history, and they will score your wallet using your transaction history. And uh, if your score is below, let's call it number 50, or whatever the threshold that they might have it at 50, it could be 60, I don't know what it is. It's gonna be, if your value is below 50, then you are denied. You cannot use the banking sector. You cannot use an off ramp. And they will scan all of your public wallets. So if you want to prepare for this, if you know that you have something called directly tainted tokens, fully tainted tokens, or indirectly tainted tokens, whatever that means, or you have used multi-step transactions, for example, if you have done a swap on your wallet on some let's call it interesting places like Tornado Cash or some other platforms that basically obscure the owner of the token, then you might end up in this deny list, or your wallet could end up in this deny list, and you're basically unallowed to use the banking sector. And they will most likely want to use this regulation also on DeFi protocols that they can enforce legality on top of them. So crypto is becoming less good. And I know already some people, especially in Europe, have contacted me and told me that they want to use this bull run as basically their final hurrah, and they want to exit crypto because of all of the uh, I'm losing the word here. All of the scrutiny, yeah, all of the scrutiny against them, their crypto holdings, their crypto trading, and they want to use fiat and normal banks and all these things because the value proposition of crypto is not as good as it was in 2020. So they use this bull run, make the exit money, and exit with whatever they can. And all of these things basically just make crypto less good because you want to have crypto as basically cash, But if they can make a profile of who you are based on your transaction history and they use it against you, that's basically devaluing the value proposition of crypto, which is permissionless, open for everybody. Everyone can use. It doesn't matter where you are. They want to make fences, digital fences around that whole thing. So this is a bad thing in my opinion, and this will lead to some people wanting to exit crypto as a whole. But this might be bullish for fully transparent, fully compliant crypto protocols like Aave or some other ones that are adopted by the banking sector. So all in all, that's basically the update here. In my opinion, this is a little bit bearish. Doesn't mean it's bearish immediately, but it's causing some people to basically fear using crypto because their assets could get frozen without them even knowing if they are on this deny list or not. Then we do have some updates, some good ones, obviously. So MetaPlanet has acquired another $100 million worth of Bitcoin last week. And then Sailor, once again, posted this chart here. So he most likely will announce a crypto purchase, Bitcoin purchase in the next 12 to 24 hours once again. And then looking at Ethereum reserves, you can see SharpLink Gaming added 200,000 Ethereum just simply last week. So even though we have the potential sell pressure, about 500,000 Ethereum coming from the unstakers, most of that is not going to be sold, likely maybe half of that. So just within 1 week, one company was able to basically buy almost all of the sell pressure from that unstaking event as of now. It could build up into something worse, but these companies do not plan to sell Ethereum anytime soon, and they are buying massively. And then on August 12th, you saw ETHZilla buying 82,000 Bitcoin and BitMine 300,000 Ethereum. Sorry, now I'm confusing Bitcoin and Ethereum. 300,000 Ethereum as well on August 11th. So even though that is a bearish thing, we have a lot of buying for Ethereum also at the same time. Then looking at Bitcoin treasuries, here we have an update as well. So the current value is 3.76%, which is basically the same as it was last week. And that is good because that means we're in the same exponential trajectory that more Bitcoin is being added to treasuries at a very good speed. And now we have a new entry here in this list as well. So in my last update on Friday, there were 293 companies in this list, and now there are 294 companies. So good news on this front as well. And in the last 30 days, 15 companies have been added on the list. So good news on that front. And then looking at other fundamentals, the big one from last week is the stablecoin market cap, which has risen roughly $6 billion more stablecoins within one single week. So a lot of stablecoin memes came through, and this is bullish. This means more utility for crypto, and this is what we want to see as well. And then we saw some profit taking with Bitcoin. So here on the chart, on the blue line, we saw about 12,000 Bitcoin older than 3 years, which weren't moved for a long time, being moved right before this dip to the downside here. So some profit taking was taking place there, which is obviously not what we want to see, but it just makes sense as Bitcoin is this elevated in price. But the other fundamentals don't really look that interesting to me. No real update on any of these. In the short-term fundamentals, looking at liquidation heat map, this is again a little bit bearish because now most of the liquidity is below us. So there's a liquidation zone here, basically $111,000. And then we have here at $107,000 to roughly $103,000 as well. So if this line breaks, then this is basically where we are likely headed. So that is the short-term fundamental with liquidations. There's really no liquidity on top of the all-time high as of now, which is not obviously what we want to see. We want people to try to short Bitcoin, but that is not happening. And that is also true when we take a look at the order book depth. When we take a look at spot order book depth, we are seeing a lot of buying. So the current delta between the limit buy orders and limit sell orders is that buy orders, there's $124 million more buy orders than sell orders. So buyers are here, they are buying as much as they can, but the futures market is agreeing here. But the futures market, as you can see, they have been buying to the upside here and also to the downside. The futures markets haven't been selling almost at all here, which means that they are in the risk of getting liquidated. And I believe that will happen, that these people will unfortunately get liquidated. That is how usually the markets work. They go where the liquidity is at. So these people who were longing Bitcoin, hoping for an upward move like myself, I probably have to close my position and wait for a better time. But now taking all of this in looking at the technical analysis, the first thing I do want to point is that we have a triple bearish divergence here on the charts now. So here we have a lower high and a lower high on the RSI, while we had a higher high and higher high on the price. And that is a bearish divergence. And when it happens 3 times in a row, that is a triple bearish divergence, which usually signals that Bitcoin wants to have a bigger pullback. It doesn't always happen, but it's just likely that it will. But we have a couple of supports here. That was the wrong tool. Let me use this one. So this line previously held, so we might have a bounce either from this price level or this price level at about $111,000. I think we will scoop the liquidity here a little bit lower. And the next one is basically if we just follow this line to the downside. This is kind of what I'm currently now expecting, unfortunately, is that we kind of have a move like this. We go to like $105,000, maybe go a little bit lower here to that $103,000 liquidation zone here. Take out all of the liquidity there, and then we might start getting back up. But as of now, we have these sell flags, sell signals. It might not become a thing here. Currently, I'm not panicking. I haven't closed any positions yet, but I might close after I make this video. I haven't made a decision yet. I simply collected all of the information for the update zone as of now, and I will make my decision after I make this video. Let me know in the comments what will you be doing with this information that I showed you in this video, and let me know if this is bullish, bearish. Do you think we will still head to 130k by the end of the month, which previously I believe was the case, but now since we had this falling of this trend line, I'm not as bullish anymore. That's it for this update. Hope you guys liked it, and I will see you guys on the next one, and bye bye.